Hey, TGO traders, welcome to Friday's market wrap up here at Top Gun Options. And kind of thought the bleeding was more or less going to stop today, especially based on the slew of macroeconomic data that came out today. Unemployment or non-farm payroll, 209,000 there. Forecast was 231K. We had a 209 print. Unemployment ticked up a little bit to 6.2%, but you can see the rest of the red that we've been talking about all week. The only standout was ISM with their manufacturing prices and the manufacturing PMI. So 3-year highs on that. But if you dig into the report, construction spending actually plunged the most since January of 2011. But looking at all the other macroeconomic data today, other than that, Mrs. Lincoln, how was the play? U.S. manufacturing PMI, it was a big, the number was a miss, the biggest in 11 months. And employment plunges, and guess what they blamed it on? Russia and Gaza. So it cracks me up that whenever we have a miss on these macroeconomic numbers, people scram to either blame the winner or blame Gaza or blame Russia. Really don't understand how that really works. Gaza and really impacting our manufacturing PMI, but I'll leave it up to them. Had relatively good news last night out of China with their with HSBC and also with the government's manufacturing PMI. So it was a beat out of the government, 51.7, and HSBC backed it up with a 51.7, but they were looking for a 52. So the manufacturing PMI was a beat out of China. So relatively good news as the U.S. rolls over. China keeps powering forward here. Going to be closing out a trade that I placed Monday in our urgent alert model portfolio. Look at this, up $1,800, $1,900 since Monday. This is a bullish double vertical on SDS out to September, and making $1,900 in 5 days beats a stick in the eye as everything else is starting to hemorrhage today. So really nice trade. SDS, if you don't know what that is, it's the ProShares Ultra Short S&P 500. So this is designed to go up as the market goes down, and as you can see, there you go. Really nice trade as the market rolled over here. We got this trade on Monday right here, and then boom. Really, really nice trade. Always got to have an ejection seat in this market. These type of days can come out of the blue, and when they happen, they're violent, and it's very, very hard to pick a bottom here. Let's just take a look at a chart of the S&P 500 for the past 3 months. I mean, that's pretty brutal looking. That's a pretty hard rollover here. Last time we saw a rollover this bad, let's take a look at this. It's right around here, right? Remember that in April? It's probably just as deep as this one. So this 1920-ish level, if we break it, 1900 is, if we hit with any airspeed, look out below. This might be the big one finally. I don't think so because the Fed's still here, okay? Starting in October, once the Fed's gone, we have one of these. It might be the big one, and I don't think we'll see buyers stepping into the next one of these after October. But right now, I think we get, and you guys know me, I'm the world's biggest perma bear because I know that this whole rally is built on nothing but air, and it's the MacGyver market. It's a straw, paper clip, and a rubber band keeping this market up. But you can't fight the Fed. You can't fight what they're pumping into the market. So I think after the profit taking this week, I think we'll get back on our horse. But again, come October, and the Fed's out of this fight, the next debate's going to be, hey, when are we raising interest rates? And then I think the market rolls over hard. Okay, I got to run. I might actually put some weekly options trades today into this sell-off because I do think we might recover next week. So I got to run. So I'll be back with Monday's market outlook here at Top Gun Options. Happy hunting. Make sure you hedge and have a great weekend.